This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios this Wednesday morning. I'm Prashant, with me, my colleagues Sonia and Nigel. Guys, hi, good morning. It's only been, this is the third day, right? It almost feels like it's a Friday or something. It's like a long week.
So. It's a long week, right? A very long week. And of course, you have a lot of big cues. There's the US FOMC decision later tonight. The market has been so volatile and so many earnings. So I think we have our hands full today.
Well, that's right in terms of market action. But also, I just want to, send my good wishes to all the ladies out there who are fasting for their husbands, because today is Karwa Chauth. So those who are fasting and those who are not fasting as well, just continue loving your husbands.
Good advice. Nigel, keep expectations low. Huh? Don't.
I realized that my wife got up very early. I was like, what's happening? Okay.
What?
I mean, love should continue irrespective of the fast.
That's what I said. Fast or no fast, just love the husband.
On another note, what did you guys do with the market? I mean, I left at 3 and I looked at them. 80 points gone suddenly. Just wham bam.
It wasn't us, it was expiry.
All right, well, let's just see if the three of us can do something on the upside today. Expiry took a bite out of the market. Let's actually tell you what you need to know as we begin another session. So the Nifty two-day bounce was cut short. Basically, you had a bounce on Friday and Monday, 300 points, as we were saying yesterday. And it looked like a listless session for the most part till about 3 p.m. or so. And post 3 p.m., there was a sell-off. The Nifty ending about, 1/3% lower. And in that sense, then today becomes a bit of an important day. Is the bounce over or not? That question, perhaps we get a definitive answer. Hopefully, we get a definitive answer today, because if the bounce is over, then some of the lows that we saw on Thursday last week come back into play eventually, and maybe even lower. So we'll see. The US market action is, I wouldn't say encouraging, but it is in the right direction, positive, right? I mean, the S&P was up about 0.65%. Actually, US indices, both the S&P and the NASDAQ, technically speaking, have been looking pretty weak. The fact that over the last 2-3 days, they're trying to come back up gives one hope. Otherwise, I mean, chartically, you'd say that perhaps there is more downside here, but overnight we were okay. The 10-year yield went up about 4 basis points. We're at about 4.92. You have the dollar index, which also went up about 0.5% or so. It's back at almost 107 kind of levels. And the culprit here, of course, is US data, which just refuses to weaken. The US third quarter employment cost index came out. You also had the house price index, which was released. And, absolute, good strength, basically. And they beat at least expectations in terms of what the consensus was. Will this change when the Fed meets tonight? The answer is no. At least that's the broad, widespread expectation that the Fed will not do anything in terms of rate hike or anything tonight. The Fed decision is later tonight. But you also will hear from the Fed Chair Powell. There he's seen keeping further hikes on the table. When I say further hikes, I mean beyond November. If you can move the graphics along, he's seen keeping the action alive for December and beyond. Not in November, not tonight, but beyond today. Oil prices, well, they've now fallen to around $85.5 a barrel. That's the big sort of positive rub-off that we've seen here. We were knocking almost at the highs at about 93, 94, and we are now closer to 85 kind of levels, which I think is a huge relief for importers, big oil importers like us. Now, let's just kind of circle back to the levels. The Nifty recent low is 18,838. And the question is that, are we heading back there with the sharp cut that we saw? I think the answer to that is a little complicated, because yesterday, as Nigel also pointed out, it was expiry. So maybe it was, more to do with that than anything really sort of, it's not as if the market has been very strong. The uptrend has been broken. And maybe this is a pullback within a broader uptrend. But for now, that uptrend has been broken. So I think we will need to wait for that answer. And I think today and maybe tomorrow we will get that, because I'm just saying tomorrow as well, because you've got the Fed decision as well. So perhaps that keeps people a little away today. The resistance is at about 19,280, same level we've put out, 38% retracement. And actually on the Bank Nifty as well, it sold off yesterday. It was quite remarkable. It hit slightly above the 50% retracement, the level that we put out, which is 43,348, and then sold off. So that becomes important. That's the resistance. The recent low on the Bank Nifty, of course, is I think 42,105. The mid-cap index, it got to about the 38% retracement and then sold off. So that is the resistance. There's been one test of that already yesterday. That's at about 39,136. And the small-cap index, it intraday crossed the 61.8% retracement. That sold off the most. It's rebounded the most. The resistance, that 61.8 number, is 12,728. So all possibilities are still very much alive. Because later tonight you've got the Fed decision and the commentary, etc., will be important. We'll see which way we want to really go. But I think it'll be perhaps a little cautious kind of a day, despite the fact that the cues, the handoff from overnight is not bad at all. There is some stuff happening in Japan as well, which we'll get to later. Big, massive depreciation in the Japanese currency. And that is largely to do with U.S. strength, rate differentials, strength in the U.S. dollar, and so on and so forth. More on that later. The GIFT Nifty is indicating 30-odd point lower start. Sonia.
Absolutely. So it's it's going to be a slightly muted start today, down almost about 30-odd points. The Nifty has been finding a bit of resistance at that 19,200, 19,300 level. And yesterday as well, it was a volatile day. By the end of trade, the Nifty closed below that 19,100 mark. A couple of things to watch. FI sold in trade yesterday. They sold about 700-odd crores, although DIIs bought about 340 crores. The US FOMC decision later tonight, so all eyes will be on that. The Dow was a tad bit in the green yesterday, but I think geopolitical concerns once again have taken center stage as there's no ceasefire just yet. In fact, Israel's ground invasion in Gaza has started. There was, a big invasion in the Jabali refugee camp overnight. So all of that has sort of, got the risk aversion or the cautiousness has heightened overnight in the global markets. In fact, if you look at it, equities have moved to the back burner while asset classes like gold have come back. So gold is almost at $2,000 an ounce now. Keep an eye out on that level. 1980 is where we're at. Getting back to our own markets, lots of numbers in focus. L&T, very good set of numbers. Strong order book growth is what we've seen. Revenue growth of almost 20%. The street will definitely like those numbers. Good numbers from Tata Consumer as well. The India revenues went up about 11.5%. So stable set over there, both L&T and Tata Consumers. On the weaker side, you had Navin Fluorine that reported a weak set of numbers. The margins were down about 160 basis points year on year, so I'm going to watch for that. There are auto sales that come up today and don't have great expectations from auto numbers because there was the Shraddh period as well. So we'll track those for you very closely. And 4 Nifty companies come out with their numbers today, including names like Tata Steel, Sun Pharma, Hero MotoCorp. So lots of data points today. But looks like it's going to be a slightly choppy start. And this level of 19,250, 300 has been a bit of a resistance.
Well, that's right. Sonia, and in October, at the start of October, you were saying October is a favorable month for the bulls. Yeah. But the bears decided to surprise them because it was the second negative month that we had for the Nifty in the last 10 years. And for the Nifty Bank, it's just the first time in the last 10 years that we had a negative month. Now, November, what does November normally hold? On an average for the last 10 years, well, returns have been close to around 5%. But that's skewed because in 2020, you had an 11% gain on the Nifty itself. Otherwise, it's been 5 to the bulls, 5 to the bears, so split down the middle. Let's see whether or not this is the decider, and let's see which way it's going to swing. Now, yesterday we did come off the top, and that's because of expiry-related issues. And this chart actually will give you the picture. The Nifty Financial Services Index at around 245 to around 3 p.m., as well as the Nifty Bank at around 245 to 3 p.m. Expiry-related move is what we saw because the Nifty Financial Services Index paid out weekly expiry. Today, we have the Nifty Bank as well that will play out weekly expiry, so we'll have to keep an eye out on that. The broad band for the markets, though, is 18,800 on the downside to 19,250 on the upside. So that's the 450-point band that we're looking at. What are we looking forward to? If you get a dovish commentary coming in from the Fed, then maybe the Nifty makes another dash towards that resistance zone of around 19,250 to around 19,300. So let's see how that goes. The Nifty Bank, though, yesterday it went past the 200 EMA. It couldn't hold, though, above that level, and that's why we did come off the top. An additional positive this morning is that Brent crude prices are hovering around that $85 per barrel mark, which is good. A few sessions ago, we were more than $90 odd. We want lower crude prices, which is very, very positive in terms of input cost as well. So that's a tick mark, and that's something that the bulls may latch on to. What did the FIs do? They added longs as well as short positioning. Doesn't move too much. 87% of their positions on the short side. One strike that was very active yesterday is the 19,200 call. It added 45 lakh shares. The premium out there is around 36 rupees. At the start of trade, it was close to around 98 rupees because we started gap up. So there was some writing that we've seen at that particular strike. That contract expires tomorrow. So going by the writing that we've seen out there, the resistance zone comes in that vicinity of around 19,233. That's the high that we saw yesterday. And from there, we did see a bit of a downtake. Support, though, because we have, the 19,000 put as well, that has a fair bit of open interest. That's why that's the support zone. The premium out there is around 50 rupees. So that perfectly bakes in at around 18,950. For me, the big cue today is how the Nifty Bank performs. Yesterday, it has an overlap with the Nifty Financial Services Index. So that's why it did come off. The 200 EMA, can we retest that? Yesterday, we went past that intraday, but we couldn't hold on there. So that's the important mark on the upside. That's the resistance zone you're looking at. On the downside, support comes in at around 42,450, which is more or less close to the recent lows that we saw out there. So let's see how this goes. The Gift Nifty, flattish start. The Nifty Bank is the one that will give direction today.
And later this evening, we'll have the US FOMC policy as well. There's an expectation that there'll be a pause in terms of rate hikes, but commentary will also be important as the US 10-year yield has been sitting at 5%. But here's what you can hear in the next 2.5 hours. We actually have some commentary coming in from Rhythm Desai of Morgan Stanley, who says that early trends suggest an earnings beat on their analyst estimates, albeit the market appears to remain cautious as evidenced by share price performance post-announcement. He says they continue to estimate earnings ahead of the street and think that the street will need to revise FY24 estimates higher.
Well, let's get you some money market views as well. This is Kunal Sodani of Shinhan Bank, who says that there are no surprises expected from the Fed and it may hold the same tone and message as the previous one. He says expectations that the ECB is done raising rates undermine the euro and act as a headwind. He says the dollar index may find resistance at 107.2. For the dollar rupee pair, he says 83.18 acts as a support, while 83.3 to the dollar is an immediate resistance, a break of which can lead towards 83.5 levels.
Okay, and on the bonds today, you have Neeraj Gambhir of Axis Bank, who says that bond yields were in a narrow range as the market awaited clarity on open market operations sales. He says the US yields came off due to short covering, and that, along with crude oil coming off, led to improved market sentiment and a mild rally in domestic bonds. He expects the 10-year benchmark bond yield to trade in a range of 7.3 to 7.4% this week as the market awaits the FOMC decision and key data.
Okay, well, Adrian Mowat is now joining us. He's an investor at Hong Kong SAR. Adrian, good to have you with us here. Good morning. Appreciate your time here. I just want to quickly start with what's happening here this morning, actually what happened overnight, which is the big fall in the Japanese yen. We are at 151.5 or so. And looking at what the Bank of Japan said yesterday, it kind of ended this yield curve control without actually saying it. So one would have thought that perhaps is hawkish, right? It's good for the currency. The currency has gone the other way. So what's going on?
Yeah, so I think the problem was the statement was, I would say, ambiguous, and we're not clear exactly, are they ending the yield curve control? I mean, are they willing to let the long end of the bond market move meaningfully higher? And even if they did, the interest rate differential, Japanese yen versus euro or US dollar, will still very much favor the US dollar or the euro. I mean, I'm very much of the camp that the BOJ will want to remain relatively dovish. Historically, the big mistake they're deemed to have made was in the 1990s when they tightened monetary policy into a deflating economy and set it up for multi-decades of nominal decline in GDP. The fact that they now have inflation above their target is great, but I think they should give themselves a bit more time for those inflation expectations to get embedded. And that is going to take time after, you've got a generation that knows nothing but deflation.
Adrian, hi, good morning. So what is your own expectation from the US Fed later this evening? Of course, there is an expectation that they won't move on rates, but given the way the US bond yield is shaped up, it's almost at 5%. What would your expectation be as far as the commentary goes?
Yes, so I would expect them to be on hold in terms of Fed funds rates. And I would expect some commentary looking at the tightening effect of the move in bond yields, which were below 4% in July, to near 5% today. So expect them to be on hold, even though the high-frequency economic data, particularly the third quarter GDP numbers, which were extraordinarily strong, particularly in terms of nominal GDP, could give them a reason to raise short rates. But I think because of what's been happening at the long end, the almost end in the inversion in the yield curve will make them pause. But it's a pause, if the data continues to remain robust and the impact of higher long rates isn't seen to be slowing down activity, then the Fed may move at a subsequent meeting. And I do think there is this risk that expectations around Fed cuts in 2024 are probably going to prove to be too optimistic.
All right. Hi, Adrian. Good morning. How do you view the Indian markets, though? We have been resilient, Teflon coated, so to call it, as my colleague Prashant keeps saying. But how do we go from here? Earnings growth is something that we offer. Valuation's pretty much in line.
Yes, but the Indian market has performed well, particularly in local currency, and it was performing well as the US market was up until July. Since July, we've had a big increase in US bond yields and a strengthening in the US dollar, and you've seen the Indian market correct in line with major markets like the US market. I think for the Indian market to start to make progress again, we're going to have to go back to this discussion about US bond yields. I'm more comfortable with US bonds around 5%. I think that's a sensible sort of neutral long-term value for US bonds. So maybe they will break through 5, but the risk is obviously much lower than it was in July when they were below 4%. But I would follow the US bond market, see if bonds can avoid breaking above 5%. And if we get that comfort over the next month or so, then I think you start to add to risk assets, and that would include the Indian market. But for now, I'd be cautious. I'm a bit nervous about what's going on in the bank index in India. It does look quite weak. And obviously, as a near cyclical, financials are quite an important signal. So again, if I was thinking more technically, I'd like to see the Nifty Bank Index sort of hold these levels. But at the moment, that actually does look that looks technically pretty weak. And then when you go and look at the fundamentals, there have been negative earnings revisions in the banks. So you've got what looks like quite a tricky stock picking market. You did highlight the L&T numbers, and the market is definitely rewarding companies that are beating expectations. But we've got some big sectors in the Indian market that are not beating expectations, and obviously that's a bit of a drag.
All right, we leave it at that. Adrian, thanks a lot for joining in. L&T, by the way, has also rallied 40% this year, right? So perhaps the street was already factoring in a very strong set of earnings. But let's see how the street reacts today. It would be interesting, given the kind of rally that the stock has seen. Let's slip into a quick break. All of these stocks and more will be discussed on the other side with our entire research team. Stay with us. Well, all eyes will definitely be on L&T after a very strong showing that the company had. But remember, the stock has also rallied a lot this year. Vivek is here to give us the fine print. Vivek, good morning.
Well, good morning. Absolutely, very strong showing by L&T in the quarter gone by. It's a beat across all of the parameters that we're looking at. The key positive being, now remember, the management has indicated that it is most likely going to go ahead and beat two guidances that I had given earlier. One is the order inflow guidance of 10 to 12% and the revenue growth guidance of 12 to 15%, likely to exceed both of that. What is the slight negative in this particular results? The EBITDA margin guidance for the core business has been revised downward slightly. Earlier, the anticipation was that it would deliver close to 9%. Now, it has been trimmed down to 8.5% to 9%. Talking about the numbers themselves, revenues higher by 19.3% on a year-on-year basis, a beat to our poll, coming in over the 51,000 crore mark. EBITDA, to above our poll, the core EBITDA we are talking about, up 15%, coming in over the 5,600 crore mark. Margins have contracted by 40 basis points on a year-on-year basis. However, remember, the management has indicated that H2 onwards there will be margin improvement because the legacy orders that the company is now being that it is executing right now will be out of the system, and therefore they expect margins to improve. Lastly, profitability higher by 45%, again a beat to our poll. Order inflow growth very strong, up almost 72% on a year-on-year basis. This is the consolidated order book, and when you're talking about the consolidated order book, currently the order book that the company has is very strong, over 4.5 lakh crore.
Okay, all right. Thanks a lot for that, Vivek. In fact, we'll be joined by Mr. Shankar Raman, the whole-time director and CFO of L&T, at 10:15 a.m. later today to discuss the past quarter's numbers. The other big nifty name that came out with numbers of Bharti Airtel, Rima, joins us to tell us more about that. Morning, Rima.
Hi, good morning. So slightly lower than what the street was anticipating. Consolidated revenues have fallen by 1.1%. We were anticipating a decline of 0.8%. Now, Bharti Airtel is a sum of parts. Airtel Africa numbers we knew, impacted by the Naira devaluation. It's the India mobile, the wireless business that we focus on, where the revenue growth at 2.7% quarter on quarter is again softer than the 3.2% that we were anticipating. This 2.7% revenue growth is been driven by a 1.5% ARPU increase, average revenue per user increase, and a subscriber growth. Now, comparing it with peers, Bharti, Vodafone Idea, and Reliance Jio, Jio performs better on the revenue front with a near 3% top-line growth and even on the subscriber addition. Though on the ARPU, the average revenue per user, Bharti still is slightly ahead. Profits for the company have fallen due to an exceptional, tax item due to the recent Supreme Court hearing. So broadly, Bharti's numbers are slightly softer than what the street was anticipating.
All right, Rima, thanks very much for that. Let's move on. Tata Consumer reported as well. Mangalam has got details here. Mangalam.
Well, they reported a good quarter, and the street was anticipating that. In fact, the company reported revenue growth of 11%. EBITDA grew over 20% as well. And if you compare it with our poll as well, the revenue is 3734 crores. We were working with a number of 3725 crores. The EBITDA as well, 537 crores, largely in line with our expectations of 525 crores as well. In the geographies, the India business grew about 11%. The street expectations were a range of anywhere between 10 to 12%. The international business optically grew 13% versus expectations of 5 to 7%. That's also on account of a couple of businesses that they consolidated within them. So that acquisition aided the optical revenue growth out there. India beverages grew 8%. Foods grew 16%. The heartening fact was their growth businesses, which include the likes of Soulful, Sampann, and Nourishco. All of them grew 39%, and this despite a weak quarter for Nourishco on account of summers, or rather, seasonality itself. And Starbucks revenue grew 14%. They added 22 new stores, and they were a bit positive. So see some green on Tata Consumer.
Okay, all right, Mangalam, thanks a lot for that. Well, I'm looking at JSPL. The numbers are a little bit disappointing. So the EBITDA number did miss our estimates by close to around 150 crores odd. That's what led the consolidated margins as well to come in lower. The key disappointment was on the India business. The India EBITDA per ton, which is bulk of their profitability. We were working with a number of around 12,150. Well, it came in at around 11,165. What I'm talking about, the adjusted EBITDA per ton. The other important factors that did play out, one is the exports. Well, they moved a little bit higher on a sequential basis to around 13%. The net debt, though, has moved up a little bit on a quarter-to-quarter basis. And the problem is some of those projects that they were talking about, it could be a little bit delayed. And the capex spend as well has been up. So put it all together, these numbers look a little bit disappointing.
Okay, disappointing from JSPL. But Tata Consumer was the other one. Birla Soft is the other one that we're looking at. Rima has more details on that. Rima, over to you.
Very strong numbers from Birlasoft ahead of what the street was anticipating. The company's reported a revenue and margin beat. So the top line growth has come in at 3.1%. EBITDA margins have expanded by 50 basis points despite a 1-month impact of the salary hike, and deal wins for the company have shot up by 86% quarter on quarter and up 63% on a year-on-year basis at $271 million. Nuvama, post the numbers, has upgraded its EPS estimates by about 4-5%. They've upgraded the multiple for Birlasoft to 20x, and their target price stands at 530. Back to you.
Okay, thanks a lot for that. That's on Birlasoft. But Ekta is also with us to talk about Mankind Pharma. Ekta, how did that one look?
Well, actually disappointing because the revenue was up around 11.6%, but it was really because of the export business the reason why the revenue was up around 12%. And I'll get to the segmental breakup in just a bit. The margins came in at 25%. The street was anticipating around 26%. So there was a little bit of a disappointment there. Profit of around 500 odd crores, which was better than expectations. Q1Q as well, margins were maintained at 25%. The internals indicate that the pharma business was up around 7.3% on a year-on-year basis. It has grown in line with the Indian pharma market this quarter versus an outperformance that they used to report earlier. So that's basically where the disappointment stems from. They've always been outperforming. This time round, they've grown in single digits. That's because of a possible acute season which was delayed. The consumer health business, which has extremely strong brands that we know of, was up only 1.6% on a year-on-year basis. So there was a bit of a disappointment and slowdown which came in there as well. Could be due to one-offs. Exports was up 159% year-on-year, which is what really saved the day. I expect the stock to be in the red on account of the slowdown in the pharma as well as the consumer health business. The call is at 12 p.m. this afternoon.
Okay, all right. Thanks a lot for that, Ekta. Well, let's hop across to Surbhi. She's here to tell us about Mac Financial Services and Star Health. Morning, Surbhi.
Good morning. So let me start with Star Health first. It was a weak set of numbers. The gross written premium, that was up 17% on a year-on-year basis. But the combined ratio, that was up 130 basis points, came in at 99.2% versus 98%. That is because of higher claims ratio. That was up 50 basis points, came in at 69%. Now, in the con call, the management said that they have taken price hikes in some of their key products and they will look for further price hikes in some of their other products, which means that there will be more value growth instead of volume growth. They have increased combined ratio due to higher claims ratio, and management will not be able to meet the combined ratio guidance of 93 to 95% for FY24. For Max Financials, the APE was up 39% on a year-on-year basis, very strong APE growth. VNB was up 12%, but the margins compressed down 610 basis points at 25.2%. Now, the APE growth was strong and it almost doubled in the par and the protection segment, which is higher margin products, and the VNB margin compression is not due to an unfavorable product mix, but instead due to higher commissions and investments. So that is why going with the green for Max Financials.
Okay, thanks a lot for that. Naveen, Florine had a weak set of numbers. Sonal is here to give us the lowdown. Sonal, over to you.
Good morning, Sonia. Well, yes, it was a weak set, top-down miss versus CNBC-TV18 poll. Yes, the revenues were up 12.5%, but lower than the poll at 472 crore rupees. EBITDA was up 5%. Margins, they were expected to expand on a YOY basis, but they have come down to 22.4%, and this compares with 20.8%. This compares with 22.4%. Profits were up 5%, but EBITDA margins, they have come in at an 18-quarter low. So that's the big miss that we are talking about. The company says they lost revenues close to 100 crore rupees this time around because of delays which will be accounted for in Q3. But demand for new molecules continues to be robust, and most of the projects, they are running on schedule, and stock order book is there across businesses, but there was no word on the new CEO appointment as yet. Jefferies has a hold rating on the stock. They've cut the target price to 3165 versus 3625 earlier. They've cut the FY24-25 EBITDA estimates as well, and Nirmal Bang also has cut the target price by 14% to 4,000. They maintain a buy rating on the stock.
Okay, well, Sonal, thanks for that. KEI Industries is the next one we're focusing on. Surbhi is here with details. The management, by the way, also joins us a little later. Surbhi, over to you.
It was a very strong set of numbers from KEI. The revenues grew 21%, EBITDA grew 27%. Also, the gross profit expanded. Their EBITDA margins expanded by 50 basis points. Now, 90% of the revenues comes from the cable segment, and in that segment, they saw a revenue growth of 14% and a margin expansion of 210 basis points. And within the cable segment, their extra high voltage cable that saw a revenue growth of nearly 4 times, which has primarily driven the revenue growth in that segment.
All right. In fact, we will be joined by the management of KEI Industries at 9:50 a.m. later today. So we'll keep tracking that one closely. Here's a quick recap of our top stocks with positive news flow. There's L&T, Tata Consumer, Max Financial, Birlasoft and KEI Industries. While stocks with negative news flow, there's Bharti Airtel, GSPL, Mankind Pharma, Star Health and Naveen Fluorine. But crude prices have softened actually in the last couple of days. Supply concerns have eased globally. Manisha Gupta is here to give us a roundup of all the action there. Manisha, over to you.
Thank you for that, Sonia. Well, yes, we're trading at an $85 a barrel right now, which has been a constant decline. Actually, if you look at the month of October, it was the worst monthly performance in 5 months that crude prices put out. We've seen 10% of this decline come in for the crude prices then. It's trading slightly in the positive right now as we start the month of November. If you look at the Israel-Gaza conflict, that has had a limited impact on prices. We did see a knee-jerk reaction, but because there is no impact on the crude supplies and exports, we have seen that premium go off. Also, the weak China data continues to weigh on. Markets clearly are awaiting for the U.S. Fed meeting announcement today. And then you also have to look at the Goldman Sachs report that came in last night, suggesting that the Brent prices are headed for $100 a barrel, but this is by June 2024. The deficits that might be created in this quarter will start showing in the first half of next year. For the near term, it continues to be quite volatile. It's going to be the U.S. Fed meeting today, Bank of England meeting tomorrow, and the U.S. non-farm payroll data on Friday. So it promises to be interesting next 3 days.
All right, Manisha, thanks very much for that. That's commodities in focus. We'll take a very quick commercial break here. Devin Choksi will be with us of DR Choksi FinServ for some fundamental stock check that's coming up in just a bit. A little later than that, we'll also have Amit Kumar Sinha of Mahindra Life Spaces to discuss their second quarter performance. Stay tuned.
Welcome back. Hope you're having a good morning. Well, we listed on all the stocks. We've told you how trade set up as well as looking like. So let's focus on a couple of individual stocks. And let's get Mr. Deven Choksi, MD at DR Choksi, who joins us to help us out with fundamental analysis. Hi, Deven. Good morning. Well, let's talk about a couple of big numbers that we saw overnight. L&T, those numbers look quite good. Management commentary as well positive. Your view on the results and the stock?
Hi, Jill. Good morning. Well, I think the numbers are definitely above the expectations also at the same time. But I'm not completely surprised. They are having two great geographies with them. One is India geography and second is in the Gulf, where they have a significant amount of presence along with the order books that they are continuously generating from both these geographies. Given the kind of expenditure capex that the country is spending, India is spending, and at the same time, I think given the kind of capex program that we are seeing from the Gulf countries, and the presence of L&T into different projects, into different contracts, I think that they've been winning. I think that period going forward as well, likely to remain, I think, extremely strong and convincing for the working of L&T. Of course, I think the challenges are going to be on the input cost at times, but at the same time, given the kind of higher amount of top line growth in the order book position, I would like to believe that I think they would be in a position to pass over the cost and probably, I think, maintain the margins. So certainly the numbers look impressive. Correction in the stock price in the market, I think would definitely be a good opportunity to buy stock for 15% kind of an appreciation over a period of 1 year period of time.
Okay. I wanted your thoughts on what to do with JSW Energy. Because the news flow is this, right? JSW Energy in a regulatory filing said that Prashant Jain will be stepping down as the MD and CEO of the company. Jain will continue to serve in his current position till 31st January 2024 to support an orderly transition. Commenting on this, Prashant Jain said, and I quote, "I wish to take early retirement from active professional life in order to pursue my personal interests and passions in life." We in fact tried to get it out of him the last time we spoke to Prashant Jain. He was refusing to commit, obviously, but now the news flow is out. He has stepped down. And, Deven, Prashant was telling me that the stock... Prashant Nair was telling me that the stock has had a very strong run, right, since Prashant Jain came on board. I mean, it's gone up almost 5 times. But these transitions happen. They're a routine part of every business. As a shareholder, should you be concerned?
Good morning, Sonia. Well, certainly, I think when the transition happens, I think there are certain good things also happen at the same time. I think one has seen that a lot of cleanup in the balance sheet also happens. In this case, I think we are yet to know, I think, who is going to take over from Prashant Jain. So honestly speaking, I think one would like to believe that I think things are going to be changing and changing for better only. We do not get immediately concerned about the change in the CEO positions at times. Largely because of the fact that I think today's world, the professionals have normally, I think, a relatively shorter life. I think they get burned out very fast, given the kind of challenges in the business. And as a result of which, I think one gets to know about the situation like early retirement, etc., from CEOs, the CFOs in the corporate world. So definitely one will have to look at, I think, the younger face coming into the position for this company and see how the business situation is taken forward. Of course, I think the condition in the business, I think, remains extremely strong and convincing for the space as a whole, and this company in particular. So certainly, I think one would remain relatively more confident, even though the change in the leadership is taking place.
Any thoughts, Deven, on Bharati? It reported?
So I think one good thing to note about is the contribution from the higher range of vehicle is improving. And as a result of which, I think the company is showing distinctly higher amount of margins also and realization also on a per vehicle basis. That is a positive thing that one looks at. Given the situation in which I think the country is progressing and the demand for the new passenger vehicles coming up, and with the dominant share of Maruti into the market, with the new launches which they have been successfully bringing up, I would think that I think the company would remain strong going forward as well from the performance point of view. However, as far as the stock price is concerned, I see most of the things are already priced into the current price of the stock. So unless the market gives opportunity at lower levels in the following market, I think if you get the stock at a lower levels, I think you do not have too much of headroom to talk about, at least at this point of time, despite of strong fundamentals. Maybe the price to perfection is the name of the game as far as I think the markets are concerned today. In most of the stocks, you are finding that I think the markets are already discounted at least 12 months in advance in the stock price.
Okay, all right. I also want to talk a little bit about Mahindra Life Spaces because the bookings that they saw in this quarter were very good. In fact, I want you to listen into that conversation as well. We'll come back to you in a bit, Deven. The company witnessed a very good surge in residential bookings. Volumes were also up over 44%. Amit Kumar Sinha, the MD and CEO at Mahindra Life Spaces, joins us now to discuss that. Amit, thanks a lot for joining in. Can you just give us some trends? What is the growth target that you're looking at for FY24? You've done bookings of 810 crores in the first half of the year. In FY23, you did bookings of 1800 crores. Will you be able to achieve last year's booking levels? Will the second half be better than the first half? If you can give us some numbers.
Absolutely. Thank you for having me. We did have a strong H1. But let me just explain some details of H1 compared to last year. We had some blockbuster launches last year. This year, most of our launches are planned in the H2 of this year. So we had a promise to launch 7 projects during this financial year. 2 launches happened in H1. 1 launch just happened last week. So we've done 3 launches so far. So remaining 6 launches are planned for rest of the year. So 5 months, we'll see a lot of launches from Mahindra Life Spaces. So our belief is that we'll be able to achieve a healthy growth compared to last financial year. So stay tuned for more details on the launches. These launches are very exciting across Pune, across Mumbai, across Bangalore, as well as some exciting tech stuff. The last launch that we had was in Metaverse. So you can buy your homes in Metaverse. And it was launched with channel partners with a drone show where you could actually click the QR code in the sky and get details of the project. So we are putting a new way of selling with our channel partners as well as our customers to enjoy and see the homes. And hopefully these kind of launches give us the target that we have set for this financial year, but more importantly, what we have announced publicly for the next financial year.
Amit, hi, good morning, Prashant here. I don't know about Metaverse, but a friend of mine bought a home during COVID without ever looking at it. I mean, he's, but he got a retail tour with the broker and a video call. Crazy things happened during that time. But congratulations on a decent set. The Pune sort of development, that's developable area of 1.5 million square feet, right, Amit?
Yeah, this is a new land parcel that we have just signed earlier this month, October 12th. Yes, so the saleable area is 1.5 million square foot. It's in Wagholi, which is a very upcoming neighborhood. And this is that part. We've not had historically any projects. So we've been mostly focused on not had much projects on the eastern side. So this is on the eastern side of Pune.
So this is okay. This is towards Aund and Baner, etc. Or
this is on the Wagholi area, the township area, where some of our peers have had many successful launches, and we were waiting for the right opportunity. And now
so what is the sales value opportunity overall, you think, from this project? And by when do you start construction, and what's the timeline here?
So this is 1,400 crore is the GDV, the sales value of this project. We are changing Mahindra Life Spaces in terms of the speed. So we were able to close this land opportunity within 30 days. And now we have set a target for ourselves. How do we launch it in this financial year itself? Typically, land to launch, it takes roughly 10 to 12 months. And we're saying that, can we do it in 6 months? That's what we are challenging ourselves for this land parcel.
Have you taken any price hikes recently? Because the volume growth in this quarter is 44%, but the booking growth is just about 16%. So has it all largely come due to price hikes? And if yes, what has the quantum been?
So this is the purple patch for the real estate industry. There is more demand than there is supply, especially from quality developers who customers can trust. As you know, this industry has suffered the trust deficit for many years. So what's happening is post-COVID, there's a desire to buy homes. There's a desire to buy bigger homes. And this Dil Mange More tendency is very evident in the market. So more customers want more homes and more customers want bigger homes. And the supply is limited, so it's automatically reflecting into the pricing. We also seen post-COVID, as you know, the commodity prices has corrected a little bit, but we see that also going up, also driven by the fact that on the worker side, labor side, we are seeing cost escalation of 6 to 7%. So what we see on the cost side gets reflected on the pricing side, and given the healthy demand, we are able to find the right match between demand and supply.
Okay, all right. Thanks a lot for joining in. Appreciate your thoughts. That's Mahindra Life Spaces. Good set of bookings is what they've seen this time. And they talk about their several projects as well. But let's get back to the market. Remember, there's been a lot of volatility in the market. The Nifty closed below that 19,100 mark yesterday. Anuj is joining in now to tell us what to expect today. Anuj, so many cues thrown at us, right? On one hand, there's L&T's good numbers. On the other hand, there's the FOMC meeting later in the evening. How do you sort of navigate through it all?
Oh, absolutely. Reminds you of that Terminator 2 dialogue, right? It's the judgment day. Before I come to cues today, I just want to go through the price pattern of the Nifty. And what you see here is very interesting. The highs have been consistently getting higher, 19,041 to 19,076, then 19,158, and then 19,233. On the lows also, there was just one day where the low was slightly lower. Otherwise, the lows also have been inching up a bit. So in some sense, the market's been going up, but intraday, there's so much volatility. So, if you want to play that volatility, maybe this market is for you. Positionally, it's a very tough market. I mean, because intraday, it will keep throwing you off. So it's giving you swings intraday, both sides. Positional trade, my sense, it will emerge after tomorrow's gap up or down. Now, we don't know whether it will be gap up or down. It will depend on what Jeremy Powell thinks or what he says. And that's something that we'll have to wait for, of course. The big question is the market's going with a pause, that there will be a pause from the FOMC. But will it be a hawkish pause or a dovish pause? Because the US Treasury yield, while still heavily oversold, is right at the edge. It just needs a bit push once again to get past that 5% mark. So let's see if Powell is not too hawkish, then it can lead to short covering. And if it is and if he is hawkish, then of course there can be one more move on the bond yields. One comforting factor today, though, is that the geopolitical tensions have eased a bit, and that's led to Brent crude falling to 85. I think that can be something which can be very interesting. And of course, L&T is good numbers, but the concern on margin might weigh. And there are some big domestic numbers today. We have Britannia, Hero, GCPL, and LIC Housing. Let me go through the Nifty and Bank Nifty levels then. The first support on the Nifty is 19,028 based on options, and bigger support is 18,926 to 18,940, the weekly low. On the upside, the resistance comes in at 19,158, the Monday high, and then 19,236, which is based on options and also yesterday's high. And the Bank Nifty is the crucial one. It rejected a very crucial mark yesterday, which was a 200-day simple moving average, 43,191. And even if you look at individual components of the Bank Nifty, there's mixed trend. HDFC Bank is still not stable. Kotak Bank on the other side is showing some signs of bottom. We need to see how SBI and ICICI Bank behave, because both of them are exactly at the 200-day moving average, as is the Bank Nifty. It's still in a range, 42,450 to 43,100.
Okay, all right, Anuj, thanks a lot for that. For the time being, though, we'll slip into a short break. You come back. We'll get in Mitesh as well as Sudarshan. They'll give us their trading picks as well as how do they see the index panning out.
Welcome back. There's 8 minutes to go for the pre-open session. Mitesh and Sudarshan are with us with technical trading ideas as we begin another session. Gentlemen, good morning. Good to have both of you here. Mitesh, the last 30 minutes, the market sold off after holding and treading water for the bulk of the day. What's your sense if we get a slight dip, 25, 30, 35 point dip, as the GIFT Nifty was indicating earlier, what should one do?
Morning, Prashant. I have maintained that this is a market which is sell and rally. So we got a opening which is very strong or stronger than what we expected yesterday. But again, failed at levels of 19,250 on the bank Nifty, on the Nifty. And closer to about 43, we got a high of 43,350. My level for the bank Nifty is around 43,440. So I think about 90 points lower, but broadly around 43,400, 450 zones and 19,250 zones, you will see a lot of supply come in. The good thing is that with that volatility and the rally which we saw on the weekend, which was Friday, the declining mode of the hourly and 2 hourly charts has kind of subsided. So we may be choppy, but we might not make a very significantly lower low in case we make that, or we might make a similar low to the recent low which we saw on Thursday, Friday. So I think this will be a market which will now get into some consolidation, but the longer term structure, the medium term structure is slightly on the weaker side. So I'll maintain the stance of selling closer to 19,250 on the Nifty and 43,450 on the bank.
Okay, Sudarshan Sukhani is also with us. Sudarshan, it's been very volatile, but we have many cues today, a lot of nifty earnings coming through, the US FOMC policy. How do you navigate all of that, and what's the trend for the day?
Yeah, good morning. See, the navigation of policy is very different. We don't know what will happen, and not only that, how markets will react to it. It's almost a complete unknown. So I'll leave that aside. The markets for two days now, I have been explaining that the market is likely to be choppy and sideways. After this big decline, the market then decides, okay, let's wait and pause and find out what we want to do next. That takes some time. So which means that I'm not actually bearish on the market until it starts breaking down below the previous lows. That may happen, but it's not done that yet. So in a choppy market, we have to decide only one direction in which we want to trade. Because the primary trend is up, we have to I would suggest trading only on the long side of the market, keep stop losses, buy on dips, and try to make the trades intraday.
Okay, all right, got that, Sudarshan. Why don't you go ahead and give us your trading picks as well?
Sure. Godrej Consumer Products is finally putting its act together after a very decent correction. It's moving sideways. It's now outperforming the Nifty. I think that the entire sector is probably doing that. So that's a buying opportunity with a stop under 975. Tata Consumers is another stock that is outperforming. As I said, that probably something's going on in the sector. That's a positional trade. So I can't give a stop loss because positional trades will depend on how you manage them. But you should be looking to buy that. It's on the verge of breaking out from a consolidation. Sun Pharma is an intraday short. It had a very big down day yesterday and broke down significant support levels. Stop above 1120. Another trending stock is SBI Cards, making new lows consistently. It's an intraday short with a stop above 764.
All right. Well, on SBI Cards, that is the call. All right. Mitesh, what about you? What would your stock ideas be?
Yeah. I have a buy on Lalpath Labs with a disclaimer that it's been a recommendation to a client. There. From a trading point of view, recommend buying here with a stop at 23.94 for targets of around 24.75. A buy on SBI Life. Now it's trading near to the earlier swing highs. So once it breaks about 13.75, it's about 7-8 points lower than that. So buy about 13.75, keep a stop at about 13.54 and look for a trading target of 14.20. Also buy on CUB with a stop at 134 for targets of 143.5, and Eicher Motors is the sell call. Keep a stop at 33.26, look for targets of 32.20.
Okay, we'll leave it there. Gentlemen, good speaking with both of you, but we'll have you back soon for more in just a bit from now. We'll take a break here. We are back with the pre-open session. We'll also have the management of LG Balakrishnan and Brothers joining in to discuss their second quarter performance. Stay tuned.
Welcome back. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio. Well, top industry leaders gathered last evening in Mumbai to pick the winners of the 19th India Business Leader Awards. The winners will be announced in a few days' time. Shireen sat down with the jury members, headed by the chairman Manny Makeda of Bain & Company. All the top CEOs are upbeat that the India growth story will continue despite the global slowdown. The new CEO at HUL, Rohit Java, said that India is the best consumption story of the decade and the best is yet to come. While they were upbeat on growth, the CEOs also highlighted that India needs to do more to attract foreign capital. Listen in to some of those top voices.
This is such a great time for Minja. If you look outside globally, so many forces in the world are creating tailwinds for this country. We have to think about which countries are allied, and that creates opportunities for India as the world continues to decarbonize and try to build a transition towards greener energy. That creates opportunities for India. And as the world continues to go down the path of digital transformation with the current next wave of capability, that creates opportunities for India.
We look at the per capita consumption of across all categories that we play in a large swath of categories. We're very, very diversified. Are still, 1/6 of neighboring countries. And so there's a huge amounts of opportunity in growing consumption. And we can see that happening at different tiers of the market. So I think the many forces such as digitization, the access to information, the access to aspiration, drive, the consuming class wanting to upgrade, all of that hunger to have a better quality of life, all of that is in scale. In India, it is going to be and is the best consumer story of this decade.
We are clearly seeing premiumization, but India is much more than the consumption story. India is taking leadership in the world today. And the key areas we are seeing that is one with regard to combating climate change. That's creating a host of opportunities in India. The solar challenge or the renewables challenge that's been put out by the Prime Minister is one that is enabling us to grow our solar business multifold. And you're going to see that across multiple industries that will contribute to renewables. The second is around Make in India. Today, Indian companies are making world-class products and are beating global leaders in India. And the next step for us is to beat global leaders around the world.
We see more than 1,000 FPIs registering incrementally with this bond inclusion. And this is just an initial estimate. It can even go higher. And 20 to 25 billion is our house estimate. If other indexes include India again, that flow could be even larger.
You foresee that happening? Do you think that this is only the start?
Yes. Yes.
If you take the last, say, 4 to 6 quarters of banking credit growth or growth in credit, it's in the high teens. It indicates that there is demand, and if there's demand and utilization is 70-75%, you are going to see capex coming in, and sector by sector, I'm seeing it happen. There is credit demand. I don't know which Zareen would endorse that, but probably the expectation is that it'll also come in one gush, all on one day. But we are seeing it happen, and the outlook for the coming quarters, year out, looks like it will be picking up.
Okay, that's a very, very optimistic jury on the IBLA jury round, but more on that later. In the meantime, we have LG Balakrishnan, which is on our radar. It was another soft quarter for the company, muted revenue growth, second quarter in a row, while margins also contracted 40 basis points year on year. B. Vijay Kumar, the chairman and managing director at LG Balakrishnan and Brothers, joins us now. Mr. Vijay Kumar, thanks a lot for joining in. Second quarter of low single-digit growth is what you saw. Can you tell us, where are you seeing the pressure in terms of demand, and what is the second half of the year expected to look like in terms of revenue growth?
Morning, everyone. We had projected a growth of 10%, but we were able to grow only 5%. But we still have a quarter left, and we will strive to reach the 10%.
Okay, so you'll strive to reach the 10% revenue growth by the end of FY24, correct?
Yes.
Okay, and where are you seeing the slowdown, across categories? I mean, you said that you started the year aiming for 10%, but you managed only 5% in the first half. So what are the demand trends looking like?
We were looking for a much higher increase in our export turnover, and we were able to grow only to a certain extent because of all the strife going on all over the world. So we are hoping things will improve and settle down.
Okay. All right. Hi, Mr. Vijay Kumar. Good morning. What about margin? What's the outlook from here on? 10% is what you're looking at. So second half of the year will be far better in terms of revenues. Margin band?
Yes. We've improved our margins to 19%, and we will continue to stay at 19-20%.
Okay, all right. So that's about business. You're expecting margins. It depends on how you're calculating it, but you're saying in terms of margins, what you've delivered, you're looking to maintain that. What about your Nagpur plant? That's the big driver from here on, because that will have industrial chains. I think that was pushed back a couple of quarters. December is what you were looking at to commission that unit. Is that on, or is that further delayed? And tell us, what could the revenues we look at, say for FY25 from this unit?
See, we can't make up lost volumes if the plant starts very late. Yes. We were expected to start production about 8 months ago.
Yes.
Because of the monsoon rains and excessive rains, we had to wait for the water to drain, and the construction is expected to be completed in December. So I think
so. It gets commissioned. It gets commissioned then in the first quarter of next calendar year?
Yes, correct.
Okay, and how much does it contribute in FY25? Because that's the big revenue driver that the street is looking forward to.
We expect the annual turnover there to be about 200 crores.
All right. Okay. Mr. Vijay Kumar, good morning. Just a couple of points. You said exports were hurt, but now the strikes, etc., are largely winding down, right? So exports should normalize?
See, the export into Europe is a little difficult because of inflation and the war trends and all that. Europe is a little difficult. America is a little soft because of the strikes and things going on with the auto market, auto manufacturers.
But those strikes are now winding down in the US, right? And so what is exports as a percentage of revenues now?
It's about 12% now.
Okay, 12%. Just one last question from my side. On the EV side, sir, could you tell us, what's the latest in terms of development? What's the contribution from, EV bikes?
The EV bikes are still not taken off. I don't see much of improvement in the offtake. Our supplies to EVs is very, very nominal, is very, very small. Because the multitude of EVs, each taking a very small step up the ladder, it's still like in those days we used to supply ambassadors and Fiats. The volume manufactured was very, very small. So our share to them was very, very small on a global basis.
Okay. Sir, quickly, if you can tell us, you said 10% revenue growth is what you're looking at by the end of FY24. You're sitting on about 2,200 crores in FY23. So suppose we go with 2,400 crores for FY24. Will you be able to build on to that in FY25 as well? I mean, maybe 2,800 crores in FY25. Is that a reasonable assumption if you go with a 10-15% growth?
Yes, definitely. Whatever we reach, that will be the launch pad for the next year. We will maintain the same momentum.
Okay, so you'll maintain the same momentum. I also wanted one word on the promoter holding. Currently, it's at about 33.7%. Any plans for the promoter to, sell stake, bring down their stake in the near future?
We have plans. I don't know whether I am allowed to talk about it, but we will know very soon.
The last time you were talking about increasing stakes, sir. Is that on the cards?
Yes.
No, but I asked you if you were planning to reduce stake. Sorry, we didn't get clarity. Are you planning to increase stake or reduce stake?
No, I'm planning to increase my stake. There are three ways of increasing. I can buy directly in the market, or the company will have to do a buyback, or I can issue warrants on a preferential basis. Which way we will go will have to be decided, and as per SEBI norms, I will have to disclose it.
Okay, all right. So thanks a lot for joining in. Appreciate your thoughts here on CNBC TV18. That's LG Balakrishnan. By the way, let's get back to the market now. We have our 9-10 calls. So Sudarshan Sukhani is back with us. L&T is your big gainer. I mean, it's not big. It's up about 0.6%, but it's the top nifty gainer right now, post numbers. Sudarshan, what's the call at 9-10?
Godrej Consumer Products is a buy with a stop under 975.
And Mitesh, what about you?
Yeah, I'll go with the buy on Lalpath Labs, targets of around 24.75 on the upside.
Okay, all right. Thanks a lot for that, gentlemen. Well, let's revise a couple of the top stocks that you need to track. Vivek joins us to help us with L&T. Vivek?
Well, that's right. Post analyzing the results, we are highlighting 5 key points that the market will keep an eye out for, mainly in terms of what to watch out for, especially as far as H2 is concerned. Number one, the order inflow guidance, 10 to 12% is what the company had guided for, likely to exceed that. The other one that we are tracking for is the revenue growth guidance. The management had guided for a 12 to 15% growth guidance. That too is likely to be exceeded. Now, order prospects, the key factor as far as L&T is concerned, very strong at 8.8 trillion rupees. Now, this is up 40% on a year-on-year basis. So order prospects too are looking very strong. Now, coming to, one of the key positives as far as Q2 was concerned was the fact that the company managed to bag 2 very large prestigious orders from the Middle East. And both of these orders, were well in excess of 30,000 crore. And so therefore, new order activity was up 72% on a year-on-year basis. What was the small blip as far as the results was concerned? The core margin guidance, 9% is what the management had alluded to earlier, likely to end the year at closer to the 8.5%. Lastly, what CLSA says is that management's foray into fabless semiconductor design is a significant step as far as its technology progression is concerned.
Okay, thanks a lot for that, Vivek. So that's on L&T, but the management will be joining us. R. Shankar Raman, the whole-time director and CFO, will be with us at 10:15 today to discuss the second quarter earnings. Keep an eye out on that. Naveen, fluorine is under pressure post-earnings. Sonal has the latest on that. Sonal, over to you.
Thank you so much for that. It was a weak set, no doubt about that. A top-down miss. The expectation was a margin increase, but margins have declined on a YY basis. Revenues are up 12.5%, EBITDA 5%, but margins have declined to 20.8%. Profits are 4.8%, but all of these numbers are lower than the poll. In fact, EBITDA margins, they have come in at an 18-quarter low for the company. The company says that they lost revenues in quarter 2. It is because of some delays to the tune of around 100 crore, which will be accounted for in quarter 3. Demand for new molecules continues to be robust, and most of the projects, they are running as per schedule. Strong order book can be seen across businesses. But on the back of these weak numbers and no clarity on a new CEO as well, which continues to be the pain point, brokerages have cut the target price. Jefferies has cut it to 3165 from 3625. They've cut their EBITDA estimates as well by 18 and 13% for the next 2 financial years. Nirmal Bang has cut the target price by 14% to 4,000. They maintain a buy, but do remember the stock is at a fresh 52-week low. It has seen a cut of 30% in just last 1 month. So there could be support at these levels.
Thanks a lot for that, Sonal. Well, quickly running through JSPL, the numbers are quite disappointing. The standalone EBITDA per ton missed our estimates. The debt went up a little bit, and the capex plan has been up from around 24,000 to 31,000 crores odd. Citi, they have downgraded the stock to sell. They believe that there's a downside risk to Indian steel prices because Chinese prices are now at a sharp discount. CLSA, they have an underperformed rating. They expect spreads to remain under pressure. And finally, we have Morgan Stanley. They continue to remain underweight on the stock because they say that margin pressure is likely to continue as input costs have gone up. Photo finish.
Okay, well, this absolutely photo finish, just getting ready for the market opening now. A lot of stocks in focus. JSPL is down almost 3.5%, and a couple of other names as well. From the frontliners, Bharti Airtel is down about 1.5%. There was some weakness in the Africa business. The Africa revenues were under pressure, so Bharti Airtel down in the red. There you have it, the first tick on the index. The Nifty holding on to 19,000 for now. The sensex is absolutely flat, while the bank Nifty is down about 90 odd points. Your top losers are Bharti Airtel and UPL, both down about 1.5%. There's HDFC Bank, Axis Bank and TCS that are also under pressure as we speak. On the upside though, Bajaj Auto, the numbers are not out yet, the sales numbers. Okay, I think there they are. All right, 19% growth in Bajaj Auto's sales numbers, and that's what the street definitely likes. Looking pretty good over there. We'll try and get you more details on that, but that's the top Nifty gainer, Bajaj Auto, up almost about 2% L&T is the other one, up 0.6%. Good numbers coming through from L&T. And, post Bajaj Auto's numbers, I think all the auto stocks are up and about. M&M, Tata Motors, all in the green right now. Britannia comes out with earnings today, so that one is also in the green, up about 0.3%. And then you have Divi's Labs, Dr. Reddy's, Infosys, Wipro, Apollo Hospitals, HCL Tech, other stocks that are in the green. The mid-cap index is flat with a bit of a positive bias this morning, but the frontliners, led by the banks, are slightly under pressure. So there are individual stocks. Motherson Wiring, by the way, good set of numbers coming through for the company. That stock is up almost 3%. But other than that, plenty of stocks in the broader market.
Well, that's right, Sonia. Aether Industries, the net profit did jump up by close to 35%. You also had the margins that did expand. So Aether is one stock that should come up for you on the screen. The other couple of names that were in focus here, Birlasoft. Actually, the constant currency revenue growth came in at around 3.1%. The margins as well did expand by close to 50 basis points. So those numbers look quite good. KEI Industries, it appears that they are outperforming the industry. The EBITDA number was high by 27%. The EBITDA margins came in at more than 10%, so that got a thumbs up as well. Amara Raja, you had the EBITDA that was up close to around 12.2% odd. The margins, well, on a year-on-year basis, they went up by around 30 basis points approximately. So Amara Raja as well comes up for you. The stock is virtually unmoved as we speak. JSPL, the numbers a little bit disappointing, so that stock is under pressure. Keynes Tech, well, we had the gross margins that contracted by around 200 basis points, and the margins were lower than what the street was working with. And Star Health as well. The numbers looked a little bit disappointing, so let's get that one up for you on the screen. So some big disappointments out there, namely Star, JSPL, as well as Keynes.
Yeah, there are downgrades and earnings disappointments. Keynes is a big one, right? 7% lower. Stocks at about 2,200 and JSPL is at about 604. The price targets on JSPL across, if you look at brokerages, it's so varied. I mean, I've seen 350, 800, 1100. I mean, it's really a wide variety of views across the spectrum. What else? CG Power, I think we mentioned, it's down about 3% as we start the day. Star Health, Nigel mentioned, 4% lower. Again, numbers seem to be weaker than expected. Mankind is down about 3.5%. Mankind Pharma, 1683 on that one. Paytm is down about 1% or so. There's Geofinance, which is down about 1%. JSW Energy, of course, that the MD stepping down, announcing his resignation, is down about 1% or so, at about 382. So it's not a big reaction or anything. Piramal Pharma is down about 1.25%. Stocks at about 103. It was under pressure, I think, yesterday as well. And Arvind is creeping down. It's down almost 4% now. Stocks at about 188 on Arvind. Names like MRPL and Chennai Petro were very large movers over the last 2 days. So there is, I think, a little bit of pullback which is coming through. But it's not a bad day. I mean, just to kind of turn your gaze to what's happening on the Nifty itself, not at all. It's not doing too badly. It's down just about, 10 points or so at this stage. Let's just take a quick look at some stocks on the upside as well. CDSL is up 2%, Sonia. So, I mean, we've been highlighting that for the last 3 days. Big gains. Idea is up 4%. Stocks at about 12 rupees, a little over 12 rupees now. Big volumes, by the way. MapMy India is up about 3.5%. These are stocks which are looking up to 2157 on MapMy India. There is Suzlon, which is back to winning ways, 31.5 or so. Elecon Engineering, Aether Industries, and so on and so forth. Sonia.
Now, I just want to make one mention on Bajaj Auto. I was going through the release. It's the highest ever domestic sales that they've clocked in October 2023. The domestic sales growth has come in at 36% year on year, while exports are still under pressure. So there's no recovery in the export market just yet at the moment. But domestics is where Bajaj is leading. They've also clocked in their highest ever CV sales, domestic CV, which is their three-wheeler piece, in October 2023, and highest ever Pulsar bikes sold at 161,000 in October 2023. So very good numbers there.
Oh, absolutely. Well, let's welcome in our market master. Prateek Gupta is now joining us. He's Chief Executive Officer and Co-Head at Kotak Institutional Equities. Prateek, good morning. Good to have you with us here. Thanks very much for your time. The trickle of disappointments, I'm not sure whether it is a little longer than surprises. It's either meet or disappoint. I mean, are there big surprises on the upside? Bajaj was one. I mean, maybe Polycab was another. And maybe I'm surely missing a few, but does it look like, more disappointments this time around?
Hi, good morning, Prashant. Yes, I think by and large, the earnings season has been sort of in line or below expectations, as you said, barring a few exceptions. I would add amongst the large caps, Reliance Industries is one of the better ones. But by and large, we haven't seen a broad-based upward earnings revision for FY24 or FY25 here at Kotak, and we cover almost 250 stocks. The earnings performance has been, by and large, sort of not. In fact, I would call it a bit below expectations, given where the multiples are. You generally need earnings upgrades to keep these multiples going, and in fact, to drive stock prices higher. And that's just not come through this earnings season. And the economy is still sort of, it's a slowish recovery. We're not.
So I think there's some issue with his video. So we'll come back to that, Pratik, in a while. For now, let's just try and get you some more stocks. Bharti, by the way, is your top loser right now. It's down almost about 1% I think Escort's numbers have also come out. So we'll just wait for those numbers to be flashed on the screen. But remember, tractors have been under pressure for the last couple of months because of the weakness in the monsoon. So Escort's numbers will also just be flashed in a bit. Pratik, hi, good morning and thanks for joining in. Sorry, you got cut short. I think there was some issue with your video. But tell us a little bit about how you're approaching the markets, given that there are these global, these geopolitical issues. There is a bit of FI selling as well. Are you turning a bit cautious now?
Sonia, hi. Actually, at Kotak, we've been cautious for a while on the market last several months. And unfortunately, the market hasn't done much. If anything, it's come off a bit more. Geopolitics is definitely a new concern, which wasn't there a few months back. So that does pose more downside risk, especially if the conflict escalates. And that results from an India perspective. One is overall equity risk premium globally coming off. And second is, or risk appetite coming off. And the second is oil prices going up, which obviously would impact India quite adversely. And keep in mind, this is happening at a time when India's valuations are still, we're not a cheap market. We're still almost 18 times. The Nifty is 18 times March 25 earnings. So we're not sort of cheap. We're just about middling kind of valuations. And then on top of that, you've got a slowing global economy, downside risks to all the export-oriented companies' earnings. You've got a slowish recovery in the domestic economy. You've got the private capex cycle, which hasn't really taken off in full steam as yet. And you've got the prospects of slowing government capex, given the fiscal pressures which are out there. So in that context, the risks are more skewed to the downside. At the same time, I would caution against being overly bearish also, given that we still have a lot of domestic flow, domestic savings, which are coming into the equity markets in India. And that's helping to offset the foreign selling, as we've seen in the month of October. In October, we've seen about 25,000 crores worth of foreign selling, and that's been, reasonably well absorbed. The markets come off barely 3-4% or so. So we won't be overly negative unless the geopolitical situation really worsens, or the other risk is you get a surprise rate hike from either the US or the Bank of Japan over the next few months.
Okay, all right. Hi, Pratik. Good morning and good to have you on the show. The last time we chatted, I think we briefly chatted about autos, and I think auto ancillaries was something that you're a little bit enthused about. What's your view now out there? We're getting some numbers that are coming in there, and they're not looking too bad, but we'll have to wait to see how festive season is panning out. Your take?
So on auto ancillaries, most of them, unfortunately, are more global oriented in nature. So given, the impact of the rising bond yields and interest rates globally, both in the US and Europe in particular, which are the main end markets for most of these auto ancillary companies, which are exporters, I think it's time to be a little bit cautious, and also partly keeping in mind the run-up in the stocks over the last few months. So in general, we would be a bit cautious, and we would prefer some of the domestic-oriented OEMs instead, and that too more in the commercial vehicle segment or something. But in general, the auto space, we would be somewhat cautious at current valuations.
Okay, cautious at current valuations. By the way, Escorts numbers also are looking quite weak this time actually. Just pull up Escorts Kubota. The total sales are down almost 9% year on year, coming in at 13,200 units, while domestic sales are down 8.7%. And the management says that this festive season, this year was delayed and spread across 2 months. Hence, October sales were slightly muted compared to last year. November, however, looks positive with key festivals in the first half of the month, and all macroeconomic factors remain positive. So they are quite optimistic going forward, but this month's numbers were muted because of the delay in the festive season. Pratik, how are you feeling about the financials now? We've had some good quality numbers come in from private sector banks this time. We have, some big PSU banks coming out with numbers this week. How are you feeling about it?
So we still like the banks, although they haven't done as well. But that's one of the reasons we like them now at current valuation. The valuation is indeed quite attractive, and we are still far away from a uptake in credit costs in a big way. That is probably still 1.5, 2, 3 years away. So in that context, the private banks, which have a strong liability franchise, they in particular look pretty attractive to us. Although, given the increasing risks to the market and the global economy and oil prices, etc., our preference would be now to shift more towards the safer banks, which is mainly the large, private banks, and maybe the top 1 or 2 state-owned banks. Earlier in the year, say 6-9 months back, we were actually more positive on the mid-tier private banks, some of the PSU banks. But I think it's time to switch and get back into the more of the front, the leading private banks and 1 or 2 of the top PSU banks, just given the increasing risks out there. And also from a valuation angle perspective, the top private banks have actually not performed. So their valuations have come off. They're looking far more attractive now.
Do capital goods stocks like L&T seem attractive to you even at these levels, despite the kind of run-up that we've seen in these stocks?
In the long term, yes. Although in the short term, you got to be a little bit cautious given the government capex, which is perhaps unlikely to be sustained. The kind of government capex which has been going on for the last few years. And just bear in mind, once the elections are over, any new government will have to start moving towards fiscal consolidation, given the FRBM mandate a couple of years down the road. So inevitably, you will see fiscal consolidation, which will limit the headroom available for an increase in government capex. So that's more of a longer-term issue. But structurally, from a 3 to 5 year view, we still like it. Just short-term, we would be a little bit cautious.
Just pull up Idea. Idea is up about 6% or so, 12.5 odd rupees. I mean, it's done well recently, that is. So keep an eye out on that one. And the other one, I mean, in these, names which have been troubled business-wise, etc., over the last many years, Jayaprakash Associates is another one. Our colleague Ritu reported that ICICI Bank and the company, Jayaprakash Associates, ICICI Bank is the lead banker, one of the lead bankers along with SBI for JP. They're in talks to try and resolve the debt issue outside of the NCLT process. And I think there is a hearing later in the month of November. So keep an eye out on that one as well. So both these have been doing well. The other one is Bombay Burma, 7.5% rally. Huge volumes coming through. Stocks at about 1450, 1453 as things stand right now. Pratik, any idiosyncratic opportunities as you see it? I mean, as you said, you have a 250 stock coverage universe. I'm sure there is money to be made in absolute sense, even as you're overall cautious. What are your top ideas, absolute return perspective?
Firstly, in the short term, very little. We are really scratching our heads for investment ideas in the very short term. You have to have a slightly longer term perspective, more than 1.5, 2 years at the very least. But from that angle, we do like I said, our top ideas at current valuations, plus given where we are in the economic cycle, the markets where we are, still remains the private banks. The large 3 or 4 private banks, in our view, look extremely attractive at current valuations. Credit costs are low, loan growth is decent, they have a strong liability franchise. NIMs are going up, but not by so much. So ROEs are still going to be quite attractive, and they're extremely well positioned to benefit from an increase in both the private capex cycle as well as in residential mortgage as the residential cycle also picks up. So that's one. And the second is some of the real estate plays where we think interest rates are probably close to peaking out, maybe another 25, 50 bips at most in the next 6-9 months. And gradually you're seeing the consumer recovering, the consumer sector. So gradually you will see the real estate, residential real estate sales in particular doing quite well. So these are the two segments where we see pockets of opportunities over a slightly longer term time frame. But bear in mind there are obviously the overall market-wide risks in the short term, which I pointed out to geopolitics and central banks raising rates and so on. But those are more short term in nature.
Okay, got it. Thanks a lot, Pratik, for joining in. Have a great day. And a good week. That's Kotak Institutional Equities with their view on the markets. But let's now focus on Bajaj Auto. Very strong numbers coming in the month of October. The highest ever domestic sales in October of 2023 is what the company has reported. Just look at that graph. The domestic sales from an average of around 1.7 to 2.5 lakhs has gone all the way up to the domestic sales are at 3.29 lakhs. So that needs to be corrected. Overall sales are at 4.71 lakhs. So let's talk about that. Exports are still under pressure. Rakesh Sharma, Executive Director at Bajaj Auto, joins us now to talk about that. Mr. Sharma, good morning and thanks for joining in. Earlier last month when we spoke to you, you said that you're hopeful that the retail growth will be about 4-5%, or rather even it would pick up to about 5 to 8% in the festive season. What have you seen so far in the retail growth in October, and what is the trend looking like for November?
Good morning, Sonia. We are very pleasantly surprised by, the consumers' return to the stores in big numbers. We are in the 16th or the 17th day of the festive season, and I think the industry is doing pretty well, recording between 15 to 18% growth, and we are probably at twice the industry rate. We're still halfway through the season. There's going to be Diwali, and post Diwali in some parts, it goes on till Chhath Puja in Bihar and parts of UP and Bengal. I think it'll probably continue at this rate. And we did get early signs of a good festive in the mini festives which we have for Ganpati and Onam in Kerala.
Okay, so you're saying you're pleasantly surprised by the consumers returning to stores in big numbers. Can you break that up for us? Earlier you had said that the mass market segment is still struggling while premium is doing better. Are you seeing a recovery in the lower end as well?
There is a little bit of recovery, but I must say that the top half of the industry continues to furiously outpace the bottom half. So, and particularly the entry level. So the top half of the industry is growing probably at 2.5 times of what the, let's say, the 100cc segment is growing. So that trend continues. There's no shift in that trend.
Okay, that's important. So you're not seeing a big recovery in the 100cc segment. At the same time, the top half is growing at 2.5 times the 100cc segment. Got it. Can you tell us a little bit about what the numbers could look like in November and December? I mean, the wholesale sales are now around this 4.5 to 4.7 lakh range. Can you outpace that in the next couple of months?
Well, it's always a very difficult thing to estimate numbers in the middle of the festive, because we still got half the festive go. And then November is again, second half of November, when the dust settles, we will see really at a fundamental level how much the industry has grown. And the numbers which I had given last month of 5 to 8% was about the industry outlook over a quarter. We were expecting the pure 33 days of festive to be in double digits. So one will have to wait till end of November to really understand whether the industry is going to be still in that 5 to 8% groove, or there will be a fundamental shift. And on that basis only can we sort of predict our own numbers.
Mr. Sharma, last time you were on, you were saying that the electric two-wheeler segment has been kind of stagnant. stagnating rather at the 65,000 units a month kind of number, post the FAME subsidies. Have you seen any sort of recovery uptick for the month gone by? What are you seeing now in November? I mean, actually, in October, what have you seen and what's the expectation? Will we see an uptick?
So, of course, there is an uptick which is caused by the festive, and but in terms of penetration, I don't think that there is an increase. So the 65 may go up to 75, 78,000 units. We'll see how the numbers come in the next couple of days, but I would hazard a guess around that, which would mean that as a percentage of overall two-wheelers, the penetration is almost the same as the last 3 months.
All right, Mr. Sharma, final question before we let you go then. What about exports? You've been hovering around this 1.4 lakh month, for the last quarter as well. But most brokerages, they're estimating you go to around 1.5 lakh for the second half of this year on average. Do you think that's possible?
The export story is so dependent and closely intertwined with the macroeconomics, which again is, constantly getting disturbed due to various events which are occurring around the world. So it's very difficult to say when that will resolve itself. The biggest market, Nigeria, has just had a serious devaluation again, which is a huge short-term pain, but it is good from a longer term point of view. But a lot of the other markets are recovering quite smartly. So I would say that on a quarter-by-quarter basis, what we had been saying is that there is going to be a incremental improvement. I think we are still seeing that. We think that quarter 3 is going to be better than quarter 2, and of course, quarter 2 was better than quarter 1. We will see that trend continuing, but it's going to be a little bit of a chaotic move upwards.
Okay, got it. It is very volatile. I want to know, what is the domestic market share currently as we speak? And earlier you had said that you're vying for the #1 spot in the mid-market segment with your new launches. What's the mid-market segment market share at the moment? So overall, as well as in this piece specifically?
So we've obviously yet to see the October registration numbers, which will come in a couple of days' time. But I would say that we would have garnered about 1 or 2%, 1.5% at an overall level. And I think we are probably the 125cc plus segment. We are, 30% plus. So depending on how the other competitors have done, very close to the, hovering around the #1 spot, I would say. But yes,
so the overall market share is what?
But yes, the outlook is, can I just complete the outlook?
Yeah, sure, go ahead.
The outlook which you had asked, based on the complete refurbishment of our flagship brand Pulsar, which has got a completely new portfolio, plus another few launches in the next 2-3 months, bodes well for this drive for the #1 spot in the 125cc plus segment.
Okay.
All right, Mr.
I just wanted that one number, that overall domestic market share, what does it stand at now?
I said between 18 to 19%.
18 to 19, all right.
All right, Mr. Sharma, we'll leave it there. Thank you very much, and congratulations once again, sir. I dare say, an old economy company in that sense, not exactly old economy, or new age as well with electric bikes, etc., but growing at 20% and still at what would be a very reasonable kind of valuation. So fantastic. Thank you very much for joining us, and great speaking with you here on CNBC TV18. So 19,100 actually is where we are at on the Nifty, with about a 5-odd point again. So there's a bit of a recovery which has come through from the lowest point. We'll take a quick commercial break here. We'll come back. Mr. Shishir Joshipura of Praj Industries will join in to talk about their second quarter performance. A little later after that, we'll also have the management of KEI Industries. That'll also be an interesting chat, so stay tuned. Okay, welcome back. I mean, the market's doing just fine. A 2-point change, but it's flattish, listless. Yesterday, we had a similar kind of session, and of course, in the last 30 minutes, things turned for the worse. So let's keep an eye on what happens today. But there is so much more stock-wise which is moving, and we'll come back to some of this in just a bit. But we have lots of earnings to address. You heard from the management of Bajaj. Praj Industries is the next company we are speaking with. They showed a good performance in the second quarter. There was a margin improvement, although revenues actually were flattish. Shishir Joshipura is Managing Director and Chief Executive Officer of the company. He's joining us now to take some questions. Mr. Joshipura, great to have you with us here. Thank you very much for your time. Prashant this side. So flat revenues, but margins up almost 200 basis points. Could you just describe what happened in the quarter? And, straight off the bat, if you can tell us, what are sustainable margins from here on? What should we expect for the rest of the year?
Thank you and good morning. Yes, the results are out, and as you mentioned, the top line has not shown any growth. However, the margins have shown a growth, which is now the second successive quarter that we have been able to show that. We have always maintained that in this particular year, the way the orders have stacked up for us for execution side, we expected second half to be very different than first half. Plus the fact that in this particular quarter, we saw a very unusual market development, which was in form of a ban of rice sale to the grain-based ethanol plants from FCI. And that led to almost 8 to 10 weeks kind of a slowdown, both for the new contract finalization as well as for execution of the contract, because obviously some clarity was required. Government, of course, moved very fast, and then they corrected the ethanol prices to align with the market price of the raw material. So that was a big event during the quarter that happened, and that had impacted our top line performance. As we move forward, we have talked about the fact that we are moving in a direction to change our product mix. Also, both our export to domestic share. We are taking several efforts to ensure that our margin story improves, and the effort is in the same direction.
So what should be margins, sir? You're close to 10% now. What should we expect going forward?
So the way I'll put it is like this. All our team is working to ensure that we don't erode what we already gained and only build on what we have.
So at least where you are, 9.5%, right? And maybe some improvement from here on. Got that, Sonia.
Okay. Mr. Joshipura, good morning and thanks for joining in. Can you tell us, what kind of order book execution, if you can just start with telling us what is the exact order book at the moment that you're sitting on, what is the kind of execution that you're planning to do in FY24, and what is the order visibility like over the next 1 to 2 years, the numbers?
So the way we are looking at it is like this. So there have been several developments which have been, of course, India's EBP 20 program continues absolutely on its track. So that's the one clear driver for us in the domestic market. The CBG business that we have talked about in the past is beginning to show signs of coming to fruition and becoming stable growth business from its nascent stages earlier on. The ecosystem is developing very, very positively. We have talked about low carbon ethanol in United States, and I'm happy to share that we have the first contract for low carbon ethanol opportunity out of United States included in this quarter. We are also looking at energy transition and climate action related opportunity development, which is essentially green hydrogen, green ammonia and associated projects. We see positive development there as well. So in terms of market drivers and our focus market segments, we see positive news coming from several of these areas. On the other hand, as I mentioned, in the quarter, we had this temporary problem of grain availability, which is, of course, fully passed behind us now. So it's a mix of some positive developments, some negative developments. So we continue to see a positive development for our order book as we move forward.
All right. Hi, Mr. Joshipura. I want to ask you more about the CBG part of that business that you're saying that, it's seeing some traction. But tell us, what do you end this year with in terms of revenues? Margins, you've already told us. And your current mix, I think, is 80-20, domestic and exports. How do you see that mix changing? I think exports is a better margin business, right?
So, yes. So, the fact that for the first quarter as well as for this quarter, we have, and at H1 level, we have about 30% of order book, which is constituting exports. So, obviously, this will start to translate into a sales number as well, or a revenue number as we move forward through first quarter of next year, and that's when we will start to see a change happen in the mix of the contracts, as I would put it, in more in favor of export compared to the previous period. So we clearly see a shift happening. Of course, we have still 2 more quarters to go.
Okay, and margins are better on exports, right?
That is correct.
Okay, and what about on the base of 3,500 crores? What can you deliver in FY24?
We would not be in a position to offer a guidance, but we know from our order book that we have, yes, that we are moving in a positive direction.
Okay, you briefly mentioned about the CBG opportunity out there. So tell us, what's the addressable market? And say in the coming fiscal, what kind of order intake are you looking at?
So if you look at the government launched the Satat initiative, and that has gone through its initial adjustments and alignments that were required in the ecosystem, technology, feedstock availability, and developers and the financials and the financial institutions. I think we have now come to a stage where there's a fair bit of alignment in all these elements for the CBG market. As you know, India is not a CBG economy or not a gas economy. And from that perspective, it takes a little longer for us to create this alignment as compared to, say, liquid fuels. Given that, and the government has a very, very ambitious plan of 5,000 plants. And I'm saying, and we have now seen some of the big sectors, big oil marketing companies from the government side, private sector, are all now working in with plans to set up plants in tens and hundreds. So we are really looking at a period that will unfold in front of us, where if all these plans hold from these companies, we are looking at a very different dynamics emerging in the CBG market. And we are very well poised to...
Mr. Joshipura, the last time I think you had mentioned that there is scope of almost 10,000 crores in terms of opportunity for you. Can you tell us what is, some numbers, if you can tell us in the next 1 to 2 years, what are you looking at from this space?
Well, the thing is this, that if as I was saying, that if the plans hold for these announcements that have been made by both the OMCs as well as the private sector players, then we are definitely looking at a 10,000 crore opportunity of kind of size of opportunity unfolding over the next 2 to 3 years. And we are very sure that we will be in a position to play a definitive role given our leadership position on the technology side.
Okay, all right. Thanks a lot, Mr. Joshipura. We appreciate you stopping by and giving us some details. The grain issue is behind you. You expect things to improve the second half of the year, and you're sounding reasonably optimistic about that mix turning in FY25, which will help margins in turn. Good speaking to you, as always. Well, let's get straight to our next management then. KEI Industries, that's the stock in focus, reported a rather good set of numbers, good growth, particularly in the cables business. The gross profit margin as well has expanded, while the EBITDA margin has come in at a 7-quarter high. So let's address that head on. Ms. Anil Gupta, the chairman and managing director of the company, joins us on the show. Hi, Mr. Gupta. Good morning. Well, numerous times in the last few quarters, I've been asking you, will you get to that double-digit margins? Can you hold above 10%? Congratulations, you've delivered that. 7-quarter high in terms of margin. Now, the problem is, can you maintain these margins? And what can you do in the second half of the
year? Good morning. Thank you for inviting me to your show. It has been a good show for the quarter 2 and as first half. We have grown by around 21% in sales at 1,946 crore, and on a during H1 period we have grown by around 17%. It is in line with what we have guided from the beginning of the year, and we expect that we should grow over full year period by 16 to 18%, as has been mentioned by me in my earlier interviews. And EBITDA margin should be around between 10.5 to 11%, and we'll definitely try to meet the expectations of reaching close to 11%. Exports has been substantial, and look forward for better numbers in the coming quarters.
Okay, so 16 to 18% top line growth, 11% margins is what you hope to clock in the near term. I just want to understand, what is the status of the Gujarat plant that you're planning? Over the next 1 to 2 years, will there be any capacity expansion? If yes, when does it come on stream? And what would this do to your annual revenue trajectory?
The construction has already started, and we hope that first initial phase should be over by within 1.5 years, and we should be able to commence commercial production in the last quarter of FY25. We are also doing brownfield expansions and debottlenecking in our existing plants, which should give a growth of 15 to 16% in next year as well, during 24-25. And so far as Gujarat plant is concerned, we expect that once it is completed over a period of 3 years, it should generate a revenue of close to 4,500 crore from this factory.
Okay, so the Gujarat plant will be completed over 3 years, and 4,500 crores is the kind of revenue opportunity that you see you can generate from this particular factory, right? That's annually?
Yes, correct. Annually.
Okay.
And the production will come into phases, starting from 18 months, and then 24 months, and then the 3 years. That is gradual growth will be there in that.
Okay, I just had one follow-up question. You said that the initial phase will be over within 1.5 years. That is that's for the Gujarat plant, is it?
Yes, yes.
Okay.
That's correct.
Got that, sir. Just, Mr. Gupta, good morning, Prashant here. Just to go back, I mean, the beat largely came from the extra high voltage segment for you. That grew some 300%. It's only about 10-11% of your overall revenues. Could you tell us what happened there? Is it just, I mean, growth coming off a low base, or is something happening, and what should we expect for that segment going forward?
No, actually, there were pending dispatches from the Q1. A lot of cables were lying ready and could not be dispatched because of the ROW problems and the customer clearances. So that substantial dispatches have taken place in this quarter, due to which there is a sudden spurt. Overall, we expect that this business should do around 500 crore to 600 crore over a full year period, as per our present capacity.
Okay, so this is just normalization of orders booked and then sort of shipped in the second quarter, which could not be. And you're saying revenues here should be 500 to 600 crores from this segment, normalized revenues, based on the current capacity. Got it.
Okay, all right. Couple of other aspects then. Export revenues as well, they're holding around 200 crores. How do you see that shape up from here on exports? And EPC revenues, I think it's the highest we have seen in the last 14 quarters. What's the outlook out there? You're around 310 crores for the last quarter.
Export revenues should continue to rise. We have a substantial traction and demand from our export customers, and trying to add new markets as well. So I think that we are trying to reach to 15% of our total sales coming out of exports in the coming quarters. Secondly, regarding EPC, actually, we are trying to limit our EPC business between 500 to 600 crore, and due to lower base in the last year, the growth is looking at 25% this year.
But you did 310 crores, so so that did spike up. But from here on, you're saying what will be the normalized run rate for the EPC business?
Close to 600 crore over a full year period.
Full year, okay.
Okay. Can you give us some qualitative aspects of how demand is shaping up? If you can, give us a split between value and volume growth. I'm asking because some of your peers like Havels, for example, said that they are seeing a bit of a slowdown in the housing wire business. Are you also noticing some moderation in growth? If you can, give us some qualitative aspects.
I think there is a little moderation in the growth in the house wire business, but cable business is quite steady and is growing due to infrastructure demand and demand from new industries as well as exports. And I think, no segment of the business always move in the same direction. There are little ups and downs, but some other segments make up the revenue shortage from the other business.
From your calculation, do you think that you're gaining market share?
I don't know whether we are gaining market share, but I mean, because of our lower base compared to Havells or some other companies, maybe our growth rate is faster.
Mr. Gupta, we spoke with, I remember it was KEC a couple of months, actually a month ago, maybe a little more. They said that, for some of their businesses, there is, because of the start of the election season, I mean, state elections start next year, before that, orders get bunched up, and then during the course of the elections, things start to, they see a bit of a soft patch. For some other segments, there could be a ramp up as well. I mean, for your businesses, any expectations historically? What have you seen?
See, Prashant, KEC has more of a utility and government department business because of the EPC. So, an EPC business during the elections, ROW issues and digging, etc., and the construction slows down. But ours is majorly a supply business and diversified into domestic as well as exports. I can't say what can be the impact of the elections. There may be little bit of impact during the election period, that is first quarter of FY25, but I can't predict it at the moment about this.
Okay, so we'll leave it at that. Thanks a lot for joining in and speaking to CNBC-TV18. We have another company joining in right now. There's RITES. It was a muted performance from RITES in Q2. The turnkey segment revenues witnessed a decline. Margins came in sharply lower at 23.7%, and their consolidated profit and EBITDA also has moved down lower year on year. Rahul Mithal, who is the chairman and managing director at RITES, joins us now to talk about that. Rahul, thanks a lot for joining in. You did mention that the decline in revenues was because of a fall in export earnings and a decrease in the quality assurance revenues. Is this a one-quarter issue, or do you think that this weakness could extend into the second half as well? What are you looking at in terms of revenue growth?
Morning. Yes, you are right. The impact was primarily due to these two streams. If you compare quarter and quarter, year on year, about 75 crores was the impact of the export stream of revenue, and about 25 crores on the inspection stream of QA stream of revenue. And both are primarily because, as I said in my earlier interactions, that the order book for export, we started the FY only with about 100 crores, and these are pre-COVID orders. QA stream of business, the entire dynamics have changed because our major client, IR, divided the business into 4 service providers through a competitive mode of tendering. So the pie has got split both in terms of the top line and bottom line in the inspection stream of business. So these were two challenges, but to tackle them, we have a 3-pronged action plan, and each one of them is progressing on track. That is diversifying and getting more non-IR inspection clients. Number 2, building up on our project consultancy revenue, which grew 20% year on year, 10% sequentially. And in the export stream, we have already emerged L1 in 2-3 places, totaling to about 1,500 odd crores, which we are looking forward to getting converted to finite orders in the coming weeks.
So by the end of FY24, is there a possibility that you could even see a degrowth? I'm asking because earlier you said that FY24 revenues would be better than FY23, but there's been 2 quarters of degrowth now in revenues. So do you think you could end the year with a fall in revenues compared to FY23?
Not at all. In fact, in the beginning of this FY, we were very clear that this is going to be a tough year, considering these two scenarios of the export and the inspection were very clear that this is going to be a challenge. So this year, we were all through our strategy was to hold on there, to try and diversify and be at least reach the levels of last FY, both in terms of the top line, bottom line, and margins, and get these new things in place, whether it is the export orders, whether it is newer clients in the inspection stream, or whether it is a substantial growth in the project consultancy business. So all three are progressing sequentially on track. And as I said, this FY would be a period of trying to hold on to FY23, and I see a substantial growth happening in Q1 onwards as these three strategies start generating revenue.
All right, Mr. Mittal, hi, good morning. So for year to date, actually, first half of the year, you're down 11%, but you're saying for the year, you'll be able to make up and do a close to around 2,600 crores by the end of this year. Give us a couple of numbers then. Exports, as you said, was a very small part of your business, but now you're L1, and I think that is amounting to around 1,500 crores. So for FY25, what kind of a revenue growth are you looking at on that base of around 2,600 crores? And out of the revenues, how much will exports contribute?
You see, traditionally, export stream of revenue contributes to about 25% of my total pie. And this year has been an outlier because of the, no orders coming in about 2 years of the COVID period. So now that these orders should be in place in the coming weeks, our aim is that these start generating revenue, the latest by Q1 of FY25, if not by Q4 of this year. So our aim would be that they generate revenue, come back to the trend of about 25% of the total pie. And having said that, then FY23 and FY24 being at the same level, FY25 should see a substantial growth. We would be aiming for at least a double-digit growth in both the bottom line and the top line.
Okay, all right. And what about margins? They have come in at multi-quarter lows as well. So what's the outlook out there? Operating leverage will play out. Then you expect margins to move up. You've been, in that high 20s actually, but this time around it's come at multi-quarter low. So what's the band we should work with? Double-digit revenue growth for FY25 and margins from year on, what should it look like?
You see, both these streams of revenue, that is export of rolling stock and inspection stream of consultancy, both are high margin contributors to my overall margin. And so that's why these quarters and the coming 2 quarters will see a stress on margins. And we would be able to get back to our levels of FY23 to the extent possible in the coming FY25. As these export stream of revenue and my growth in the project consultancy continues at this healthy trend, we would like to come back to our FY23 levels of margins, both in the EBITDA and the PAT margins.
Okay. Mr. Mittal, last few questions. Sorry, the double-digit growth in revenue and profits is for the full business in FY25. Is the yes. Guidance? Okay,
yes, that is what we are aiming at, because as I said, the export stream should start generating
come back to,
in FY25.
Yes. Yeah. The first point that you mentioned, that inspection stream of business has been split into various segments and they're being bid out separately. That seems to be a bit structural in terms of how your biggest client is now awarding business. So that is a bit of a structural negative, sir?
No, it's in general, not only the inspection stream of business, but across my consultancy stream of across sectors. There has been a trend gradually from more and more clients moving from the nomination to the competitive board. So while we are geared up for it, and there is a shift towards more and more competitive bidding, but the aim then is to diversify more and more and getting more clients. We have about 13 different verticals doing consultancy across all areas of infrastructure. And the healthy trend is that we have already got about 78 orders in this quarter, averaging to about 0.85 orders per day. And we are aiming for reaching our target of 1 order per day, and I think it's reachable within the coming quarters.
Oh, wow. We look forward to improvement as you guide it, maybe not immediately, not in the quarter, but perhaps in the next year. Thank you very much for joining us. Good speaking with you, sir. Appreciate it. Well, you got the market, which has suddenly taken a bit of a dive. So we are down 50 points now. We were in conversation with all these companies, and take a look at the market. So we were at 935. We made a high of almost 19,100, and we've given up about 75 points from the day's high in the last 25 minutes or so of trade. So sharp correction from that high point, which was made about 15-20 minutes into market open. We'll take a quick break here. We'll kind of touch base on specific stocks and other indices and what they're doing. Manisha will be running us through what's happening in the commodity space. So stay tuned.
Well, let's get a quick handle on what's happening in the world of commodities. Manisha Gupta joins in. Manisha, hi, morning.
Morning, Sonia. Thank you for that. Well, I'm talking about sugar because today is the beginning of the new sugar season. Crushing starts from today. And ahead of that, we already have had ISMA come out with the expectation on what they're expecting in sense of crop this year. So for 2023-24, the expectation is that you could be looking at a production of 33.7 million ton. This is much lower than what we saw last year at 36.6 million tons. The other important point is that nearly 4 million tons out of that went as a diversification for ethanol. So if we are looking at the same number this year as well, then we are looking at a sugar availability of less than 30 million tons. Take a look at the consumption, which stands at 27.8 million tons. So we are looking at a lower sugar availability. I mean, we do understand that the availability at this point in time is higher at around 55 lakh tons, which is enough until the new sugar starts to come into the market. But that clearly means that there are no exports happening this year. We saw 6.2 million tons of export last year and a record 11.1 million tons in 2021-22. This year, we haven't seen any allocations yet, and with the kind of production, consumption and ethanol diversification and the fact that you need certain in a buffer stock as well, that does not leave any opportunity as of now in sense of export numbers there. The other important thing clearly has been Maharashtra, Karnataka, which have declared drought in many districts, is the reason you are looking at a lower sugar availability, down by nearly 8% as compared to previous year. That has been keeping the prices on the higher side. So for the Indian markets, we may have seen a gain of around 5% in this year, but the global markets have seen 35% increase in sugar prices in this year. That is because the markets also are calculating a deficit of around 2.1 million tons for the coming season, and that clearly has been supportive. So we are working with 55 lakh tons of sugar as the new season starts, and 33.6 million tons is what you will see in new sugar coming into the markets there. Another important thing is, in what India is awaiting as of now, is the ethanol pricing, which is expected to rise by 3 to 4%. It could be to the tune of 69.85 rupees per litre. The other thing that the industry has been demanding from the government is that there should be a long-term price formula that should be put in for ethanol pricing as well, so the markets know on what they need to invest and what ethanol availability you would see on a season-on-season basis.
All right, Manisha, thanks very much for that. So that's commodities in focus. We're on 40 points, 19,040 is where we are at on the index. We'll take a quick commercial break here. We'll come back and my colleague Lata will get chatting with R. Shankar Raman of L&T, which reported their second quarter earnings. Stay tuned, conversation coming up.
L&T reported a strong set, 19% growth in revenues, 45% growth in profit, of course, because of an exceptional. It was an all-round beat versus market expectation, especially on EBITDA and net profit, which came a good 200 to 400 crore above market estimates. The high point is not only has the order book grown by 72% in Q2, the company has said it will do better than its guidance on both revenues and order book. The only low point that one could see was that it has lowered its margin guidance slightly by about half a percentage point. Mr. R. Shankar Raman, whole-time director and chief financial officer at Larsen & Toubro with us. Good morning, Mr. Shankar Raman. Always a pleasure having you with us. Well, if I may start with the guidance on order book. I mean, already in the first 2 quarters itself, you have done something like I think 1.2 lakh crore or 1.23 lakh crore. And even if you took a 10 to 12% order book growth, it will come to just about 1.93 lakh crore compared to last year. I mean, you're going to beat your order book by a huge margin, it looks like. Can you give us a number? If it's not 10 to 12, is it 15? I mean, what's the number?
Good morning, Lata. I think we are in a good spot, fortunately, at the half-year level. We seem to have been on the right side of most of the important orders that we were targeting. And the programs are also sufficiently large. These are unusually large, especially the orders that we have won in Middle East. These are not the normal sized orders that feature our order inflow. So to that extent, these percentages will have to be seen in the context of these large order wins, and that are very, very lumpy, exceptionally lumpy. But having said that, I think we reported an order inflow of 2,30,000 crores in FY23. And when we started the year, we thought possibly 10 to 12% growth over that, which would mean about 2,55,000, 2,60,000 crores worth of orders that we should be able to pursue in the current year. Now, as we have closed September, we are close to 1 lakh crore in terms of orders. Now, out of this 2,60,000 crores, about 60,000, this is a consolidated number I'm speaking about, so about 60,000 crores goes out of the services orders that we get. So if you keep that aside, the projects and the manufacturing orders that we need to win for the year is about 2 lakh crore. Now, we do think that looking at the prospect pipeline that is ahead of us, and we think it's about 8.5 lakh crore worth of prospects that we have ahead of us, we think that we will outperform the order inflow guidance quite handsomely. Now, how much percentage, etc., depends a lot of events that are ahead of us now. The state elections are getting rolled out, then the union election is due. As I mentioned to you in one of my earlier conversations, we had approached this year as a 9-month year or a 10-month year. We were never looking at the year as a 12-month year because of this disruption that was likely to come up. We don't know the date set, so I'm not in a position to put a percentage point number to say that instead of 12%, it will be 15% or 18% or 20%. But what I can tell you... Sorry, what I'm telling you...
Yeah, go ahead, sir, sorry.
What I'm only mentioning to you is that looking at the prospect pipeline, if we continue to win 20% of what we bid for, as we have been doing so far, there's a very good chance that we will be much, much better than the 12% guided.
Okay. No, sorry to interrupt. Why I was interrupting you is that you will have a better handle on execution for sure. Yes, I can understand your hesitation to give a strong number for order book. Execution also has been much better than expected. I mean, revenues first quarter grew by 34%, second quarter by 19%. So why are you not giving us a slightly stronger number on revenue growth guidance? You said it's better than 12 to 15. What will that be? 20? 18?
See, Lata, I appreciate your keenness in getting a number out of me. But I must mention to you that I would like to work to maximize whatever that we can. Because look, what are we trying to do? We are trying to execute 4,50,000 crores worth of orders. And in as quick a time as possible. Normally, our projects are 3-year time frame. And the projects are sequenced not in a linear manner. There are procurements which actually come in as a lumpy revenue every now and then. And there are execution on the ground. So the way each of the projects, and we have more than 1,000 sites in which all these projects are being worked both in India and overseas. Now, each of the sites will have their own dynamics of progress, and the revenue is a function of that dynamics. My sense tells me that when I say outperform, I'm not saying that instead of 12 to 15%, we would be 16% or thereabout. I think there's a good chance that we will handsomely outperform this.
Okay. Okay, I wish I knew your word handsomely since you mentioned it both for order book and revenues, but good to hear that. Let me come to margins, where you have lowered. Now, I don't know your core margins for Q1 and Q2, but I do know the margins that you declare in your P&L, which is Q1 was 10.2, and Q2 is substantially higher, 1 percentage point higher almost, at 11%. So the margins that you report in your P&L have improved substantially. Why are you lowering your margins? Guidance.
Let me break it up for you, Lata, because the ones that we report in P&L has the benefit of other income, as well as in the quarter that just ended, we had the benefit of monetizing a portion of the land parcel of Hyderabad Metro, and which gave us almost 500 crores of profits. So all of this come into play when you look at the margin as you see in the financial statements. But to strip those away and look at the core operating margins, we reported excluding services because they don't really fit into this definition of margin that we speak about. Projects and manufacturing business had a margin of 7.4% in quarter one, and that margin stays at 7.4% in quarter two. We had closed the previous year, FY23, at about 8.6%. And at the beginning of the year, our effort was to take this 8.6% up by 30 or 40 basis points. So we were targeting that as we started the year. At the midpoint of the year, we have stayed stable at 7.4. I'm trying to break this up even for my organization as two-step process. We first need to get to about 8.25 to be able to get closer to that target that we have. And progressively through the next 2 quarters, we need to work hard to move the 7.4 higher and as close to 9 as we guided as far as possible. But looking at the way things are placed today, an assessment of that situation gives me an indication that when I say 9, it becomes a definitive number. Our sense tells us that we could be anywhere between 8.5, which is what we reported last year, and 9, which is the target for the year. I am not changing the goalpost. I still want to endeavor to get as close to 9 as, but it could be anywhere between 8.5 and 9. So in a way, it's not lowering; it's actually redefining the band that I spoke about.
Fair enough. That I think will make the market happy to hear that. You know, you said something about chip manufacturing, but you didn't elaborate in the con call. Can you tell us more? What are you all exactly planning to do, and by when?
Yeah, sure. But as a part of our Lakshya 26 plan, which is a 5-year strat plan, we had committed ourselves to create alternate streams of business revenue profits for the company. We know that we'll continue to do well on the core businesses of infrastructure, manufacturing that we do. So the next 5 years, as we saw then, was more of the same thing, and that looked pretty assured. And the last 2.5 years performance has actually validated that stand, that we will continue to be at forefront of all these CapEx programs that are rolled out both in India and Middle East. What new and what is it that we need to do to define future? So when we look at those opportunities, 2 things caught our attention and we deep dived into it. One was this whole energy transition. I think it is very, very important for the sustenance of the planet that we get into less carbon emitting sources of energy. World has to continue to grow to feed the growing population. So I don't think we can trade growth with climate. We need to find out how climate and growth can coexist. And for that, energy transition is important. We chose hydrogen as a stream to work on. And in hydrogen, we are reasonably confident, given our EPC track record. If somebody wants to put up an hydrogen generating plant, we have the technical capability to do it, and hopefully we'll have the cost competence. When it comes to product, electrolyzer is a very important piece of technology for this hydrogen manufacturing. It's a global product. We've tied up with McPhy France to get that electrolyzer manufacturing done. By the end of this current fiscal, we should be able to have our first electrolyzer out, and our assumptions and all that will be validated when we look at the finished product as to how relevant, how cost competitive, and how global it is. Now, that is insofar as electrolyzer is concerned. The other area that India has enormous potential is the whole area of semiconductor. As you will know, semiconductor has 2-3 links in this value chain. One is the design, which is the core of the semiconductor. Then is the fab manufacturing, which is the forging, forge shop facility, etc., the chip making. And then the third is, of course, the testing and packaging. Packaging, yeah, that's the third, marking and packaging. Now, we looked at this value chain. We felt that we may not have enough in our tank to be able to compete on the fab manufacturing, because we have to compete the Taiwanese and the Chinese and the Koreans, etc. And it would call in for a lot of investments on a fast-changing technology. So we decided that we will get into design, and hence our effort over the last 6 months has been to find out as to what area we can play in design. The chip designing market is about $27 billion in India today. And if I look at reports from people like McKinsey, etc., it gives us an impression that this market could double by 2030. So it was important for us to have a play in that development. Consequently, chip design is something that we chose. In chip design, our technology services subsidiary, L&T Technology Services, already have been working with customers on chip designs and the engineering related to it. So there is some amount of domain expertise available with us. Now, what we are trying to do is looking at all the global majors who come to India to set up their design labs. Much of designing that happens on chips happens out of India. If India has such talent pool, why not L&T participate in that and get a piece of it? So that is the reason why we have allocated about $100 million to be spent over the next 3 years in putting up design labs, both maybe in places like Bangalore and maybe at Chennai, and get into designing of chips. In chips, we will focus on chips that are used for automotive industry and industrial application. Chips are used for several things, every gadget, but we have narrowed down on these. Yes.
Okay, good to hear that, sir. The commercial guys have a gun to my head asking me to go to a break. Can you give me a monosyllabic answer? When the Hyderabad Metro divestment? 28, 29, 30?
Yeah, I think 28 is a 27, 28 is a good number to target.
Work with. All right. I'll take a rain check from you for a more detailed discussion some other time. Thank you very much, Mr. Shankararaman, and festive greetings as well to you and everyone at L&T.
Thank you, and to you and the viewers.
Thank you. We have to wrap up on Bazaar. Chartbusters up next.